Have you ever heard the expression, if you do not sell, you will lose it all? Or don't believe the mainstream narrative that there will not be a bear market? Retail seems to believe this in every cycle, but they're always wrong. Well, the crypto bros do have some experience. But what if they're wrong this time? To investigate this, we'll go through the 3 most common reasons why there need to be a bear market likely starting before the end of 2025. Reason number 1 is that they reference previous cycles, so we will have a look at that, what other type of references to previous cycle have actually turned out true and which have not turned out true. Second reason is that they claim the ETF doesn't change anything, because that is often when you hear when people say this time is different, they say no, it's all cyclic behavior, we don't have to care about ETFs or any other fundamentals or agendas. And they also reference the cycles in other markets are intact, and they have always been there, will always be there. This time is no difference. Are these 3 statements true, or are they completely false? Before we dive in, I just want to remind you there is no financial advice on this channel, it's just my own personal opinions and content. First, we need to define what we mean with a traditional 4-year cycle. Well, every 4th year we have a top, and every 4th year we have had a bottom. And the drop between the top and the bottom have been from 75 to 90%. In the bull runs we also have pullbacks. They have been between 30 and 50%. The bear market have usually been 12 to 18 months, where the pullbacks in bear markets have not been longer than 7 months. Because we need to distinguish a normal pullback from the actual bear market, because otherwise all 4-year people will say that the 4-year cycle is intact, but we just had a normal pullback that we have had a handful of in every bull market. But right now this is the definition, so we'll remember this when they start to change their mind later. And the reason I've written here that the 4 years between the bottoms and not the tops is because many of the people that are very sure on the 4-year cycle we're also pretty sure on an early top, a left translated cycle. But in such a case, the bottoms will still be 4 years apart, where they claim, even though the tops happen to become with a shorter distance between them. So this is how all the other 4-year cycles have looked like. So this is what we can expect if we have a new 4-year cycle. And this bear market is supposed to start within the next 3 to 4 months before December of 2025. And one of the main claims is that the mainstream narrative is that there is no more cycle, and in the end of all cycles this is what you hear. Here I cannot totally agree with the crypto bros. It is in fact so that in the end of every cycle, mainstream narrative is that there will not be any more dips and we will just continue going up forever. So what have happened previous cycles is that the more experienced crypto bros and girls, I guess, they are selling the Bitcoin before the top, and then we have the retailers coming in and they buy because they think there will not be any more dips, so they keep buying. And then the market shake a little bit and they get panic and sell it all, and that is in fact what have caused the previous cycles. We'll come back to this picture and what has happened this cycle in a later section. Let's start with the first claim that the cycles are in fact similar, so we can believe previous cycle will repeat this cycle. Do we have any other things that happened in previous cycles that people were dead sure will not happen this cycle, but in fact did actually happen? Well, to start with, all-time high were not supposed to happen before the halving. That had never happened before, and everyone that had been around for a few cycles were dead sure of this. So this rule broke quite easily. We have also had a handful, if not a tenfold, of moving averages that have been indicated if we are in a bull run or not. Here they have the most conservative of them at all in blue, namely the 200 simple moving averages. There are plenty of other moving averages that are going above the 200 moving average like this. And basically when we've cut this one, that has been the sign that we are in a bear market. Most conservative of them all is the 200 simple moving average, because others are on shorter time frames, sometimes on weekly or monthly, but on exponential, so on and so forth. You can easily find around 10 of these moving averages that have been used in all previous cycles and in this cycle until maybe half a year ago, and I will soon come to why they stopped using them. We just looked at 2017, here is 2021, the same thing, that this moving average is not broken until the bear market, so to say, start, even though we did have a double top here. In the sense it was correct that it was more or less over. What happened in this cycle, though, now we're in 2024, is that this moving average did in fact break here And if you go back and listen to videos from 2024 in the spring, many people started to throw in the towel and said the top is in here. Because we did not only break this moving average, this is the most conservative. There are plenty of others that were broken even earlier. Even experienced crypto bros panic sold and took shorts, which all then got liquidated when the market finally moved up. How can I claim that? Well, the simplest proof to that is that the institutional players, including the ETFs and the treasuries, have taken 3 to 4 million bitcoins since they came into the market in the beginning of 2024. And who on earth was sitting on 3 to 4 million bitcoins? We haven't mined that much, even close to that much. The newbies have not even come around this market. They don't have many bitcoins. The experienced crypto bros that have been here for a cycle or more, they are the only one that had those bitcoins. This is the only place where those bitcoins could have come from. That is the simplest proof that they lost it. Besides, if you go back and looked at the channels, you will see that they both short and sold and screamed about the top is in. Now it wasn't, but not so long time ago there was a new chance and the same thing happened. People started to take shorts, people started panic sell, and the big players scooped it up to the best possible price. And now we are here and people turn bearish again and talk about that now actually, sure, it wasn't left translated, it wasn't early. The big recession they also talked about will have happened even before the election in America. Didn't happen either. We broke all-time high before halving. We're not supposed to do that. It didn't happen either. But now they want us to believe that, yeah, this time they're actually right. This time they know what they're talking about. Or is it so that they want to be right because this cycle didn't go so well for them? After all, 4 million coins have vanished and gone to the big players. They want to redo it and have a new chance. I think that is part of the psychology why this bull market is feeling so bearish. Sure, that's speculation from my side. The other things I've told you are pretty much facts. So the reference to the previous cycle perhaps wasn't really as solid as it might sound. But what about these ETF things then? And what about other markets and cycles in other markets? Let's take this together. I will actually start with other markets first. And here the idea is that even though Bitcoin is young and only have had a few cycles, we see cycles in other markets and they are consistent and keep being there. They've been there for 200 years or something like that. Here we have kind of a 4-year cycle. This is the SPX in the 60s, 70s. And you can see that we have something a little bit similar to what is going on today because we kind of had a small top every 4th year here. So you can see we had 3 greens, then we had 2 red and then 2 greens, then 3 greens. It's a little bit similar with Bitcoin, even though Bitcoin usually have 1 red and then 3 greens every time. But similar, we go down for about a year, a little bit more, then we go up for 2 or 3 years. This repeated at least 3 times here in the 70s. And then, of course, what do you think people said that were trading those cycles here and were the experts? Went down and said, this is the cycle. But what happened? We just kept going up and up and up. And I'm sure they started short here because, okay, this must be it. But the market just kept going up and up. Suddenly the cycles were completely gone and we just formed green candle after green candle after green candle. And this kept going all the way into the 80s. And as you can see, something dramatically shifted from going in 4-year cycles. Boom, we have started to go up in an exponential phase for a couple of decades. Or are we still there maybe? No, there are some fundamental reasons for this change, and that is that in 1971, which is just about in the start here, the dollar was decoupled from gold. And then it takes some time for that to happen, meaning they started to print more money than they had gold, which was not possible because prior to that. And then in the 80s, the financial industry became very creative, and this is when they started to create a layer on top of the real market, so to say. And that is why today the derivatives market is the biggest market of all. It's bigger than everything else. And it's just a financial layer. It's not even like, citation, a real market. But let's go to some more modern time. What do we have here? Here we have 8-year cycles instead. And many often reference that we had a bear market here in 94. So the 8-year cycle actually been continuing for quite some time. In this chart you see it's not much that happened here, but yeah, in the financial market it was really bad. A lot of people got unemployed, the companies were struggling, but it's not always that what you experience to be a poor times financially is reflected in the market. That actually varies a lot, because the 90 crisis was very big, but we don't see much drop in the stocks. And this has to do with if the companies see it coming and save, so they still keep being in profit. They lay off a load of people, but they do it in time. Well, then the stocks aren't really impacted that much, because they're mainly impacted based on if the companies are doing profit or not. But then the dot-com boom, or crash, I should say, in 2001, here we had 3 years of just going down. Then we had the 2008, 1 year just straight down. We got as much down as in 2000 and the 2000 crash, but here it just went in 1 year instead of 3 years. See, here we had 8-year cycles for a while. So what will have happened if you kept trading them and thought that here the bear market starts again for 1 year or 3 years? Well, you got pretty wrecked, because the market just kept going up and up. And here we are today, still arguing if we have had any recession or not since 2008. And you should remember 2016, 8 years later, a lot of famous finance people were screaming on the TVs that the big recession is here, a crash bigger than ever before is here, just as they're saying now. But some people have been saying this every year since 2016. And some of them who proudly say they predicted the 2008 crash, like one of the Goldbugs. He did on TV say 2007 that he predicted a crash, but he did say that every year before 2008, and he have said it every year since then. So of course he's right when the crash finally comes. But he's just wrong 10 years in between. But okay, even though there is a cyclic behavior in the market, they're not very consistent. They're like wave on the water. They look the same for a few waves, and then something happens and we have new type of waves. So that statement seems to not be that true either. And the so-called FOMO people that perhaps reference the ETF changes it. This is why we shouldn't have a 4-year cycle and a 1-2 year bear market with a 75 to 90% drop this time around. They get here that ETF doesn't change anything. Do we have any examples on ETF that we can look at? Well, gold isn't that different from Bitcoin. And gold also did get an ETFs in 2004. And you can see before that, gold were going also in cycles with a few years between them. Here you had up to 4 green candles. Here you had 3 big candles. Here just 1. I think maybe we have almost 5 here. But kind of a cyclic behavior that in part could be tradable, because the distance between them is fairly consistent, even though it's not as precise as Bitcoin has been. Here we got the ETF. So I'm sure the gold bugs that were around here, they told all the newbies that now it goes up for 3-4 years, and then here comes the crash. So now you need to sell or you will lose everything. Don't believe them when they say that this will keep going forever, because we heard that here it crashed, we heard it here it crashed, we heard it here it crashed. So we know what you're doing. Listen to me, sell and take a short. And what happened? The market kept going up, and they were probably shorting it to help it going up. And what do we have here? The year 2008. Everything crashed, but not gold. This is a possibility, we don't know, but it is a possibility for Bitcoin as well. And it kept going up and going up. 12 years straight of green candles. From first being in sort of a 4-year cycle, and I'm sure everyone who had learned this were trading this, and they were dead sure it would repeat, and it didn't. So clearly, the gold ETFs did change something. Now, we don't know if it would have happened without them, but I'm doubtful. Regardless, the ETF came, and then the cycle was broken and something new happened. Just in the 80s, something happened, in the 70s, something happened with the SPX, because gold was no longer connected to the dollar, or I guess vice versa, the dollar was not connected to gold, and that something changed. And I did forget to mention 2008, 2009, we haven't really had the same type of 8-year cycle since that. Not really anything looking like a financial crash compared to 2000 and 2008. Something happened 2008, and that is the quantitative easing started back then. That haven't been around for so long, because every decade or two, people get creative and do something to keep the market going. Will it go forever? I don't know. But we're not looking at that here. We're looking at the 4-year cycle claim. So as you can see, to summarize it, referring previous cycle is not a sure thing, because so many other references to this previous cycles have turned out to be completely wrong. This doesn't exclude that we will have a traditional 4-year cycle, but definitely the argument for it are all false. Same ETF doesn't change anything. We have showed one example of where it did, and that is the most similar example we have. Most other ETFs are tied to assets or commodities that have a real use case, something people use in manufacturing, something people eat, so the price cannot be pumped up in the same way, because then you hurt the entire industry and they will fight back. But gold aren't used that much. You can pump it up. The collateral damage is relatively low compared to most other ETF. That is why the banks are using it. Cycles in other markets, well, there are cyclic behaviors, but they come and go. They're not consistent, that we saw also. So I think you could say it would actually be a little bit odd if Bitcoin kept going in for a cycle, because nothing else is keep going in the same cycles. And also fundamentally, what happened in previous cycle is that the crypto bros were selling to the newbies. The newbies got panic and then they sold everything and created the crash. This time around though, the crypto bros have probably not really been selling, but losing it from panic selling or poor trading to the institutional players and the treasuries. And the newbies likely don't have anything more now than when they started. And this, of course, begs the question, how will the Fourier cycle start then if the newbies can't get panic? Well, pretty much the only way, as I see it, is that the crypto bros themselves get panic and start to sell and create the bear market they are predicting. But wouldn't the institutional players have something to say about that? What will their next move be in such a situation? Well, that comes for the Patreon members in the second session of the Fourier cycle narrative. So thank you for watching today, and hope to see you soon again.